Hey guys, welcome back to my YouTube channel. I'm Kyle Zdrojewski with eXp Realty, and today we're here with Steve Myrick with the Fleming Group KC, located up here in Liberty, Missouri. And today we're going to talk a little bit about PMI. When I bought my last home, I was very concerned about making sure that I had 20% down so that I could avoid PMI. But as a real estate agent, we started to realize that PMI is not the negative thing that I think a lot of us, including a lot of home buyers, think that it is. So today we're going to talk a little bit about PMI to help you guys understand what it is, why it's needed, and how you can use it to reduce your payment and maybe even reduce the amount of money you need down for your next home. Steve, I'll hand it over to you.
Yeah, absolutely. So PMI is kind of a swear word with a lot of people that come in. I think what happens is this generation of buyers is talking to people who bought the generation ahead of them when PMI was outrageously expensive and deemed to be a ridiculous tack on. Really, all it is private mortgage insurance. It's just protection for the bank to ensure that if you don't have a big chunk to put in, that they want to have a little bit of security, just knowing that people aren't going to walk away from their homes. And so it's the ability for the bank to protect themselves in that way. That being said, there is a big misconception that I have to have 20% to put down, and that's just not the case. I mean, first-time home buyers can put as little as 3% down on a conventional loan, and there would be PMI associated with that loan until you get to 20% equity or so, and then the PMI falls off of that loan. But PMI is not the outrageous expense that a lot of people think that it is. So on a conventional loan, PMI pricing is broken down into increments, and that pricing is different based on how much you put down. So if you put 3% down, your PMI pricing is going to be, it kind of falls into a matrix. It's going to be priced 5%, it's cheaper, 10%, it's cheaper, 15%, it's cheaper. So you get discounts based on the amount that you put down. And then credit score also impacts the pricing on your PMI. So there's buckets in tiers that you fall in that way. But it's not uncommon for people to come in thinking, hey, we have the 20% to put down, but what would it look like if we put 15% down? So we run the numbers for them, and it's, whatever, $30 a month for PMI. They're like, absolutely. I would rather keep the additional 5% in my pocket for the moving expenses.
Yeah.
You're going to paint and carpet and all this stuff that you never think about when you get into a new house, right?
Exactly.
So it's nice to have a little bit of extra cash, stay a little bit liquid in that way, knowing that, hey, on paper, it's only costing us, in PMI, it's only costing us $20, $30 a month. That's not a big deal at all.
No.
Yeah.
No, and I think it's really important. A lot of people, especially first-time home buyers, they are really focused on, my parents said, I need 20% down on my home, even 10%.
Yeah.
And we'll talk about mortgages in a later video, but they don't have to put down that much. And really the cost to them could be fairly negligible.
Right.
And they can still get into a home and remove a lot of the risk associated with renting. And the increases of rent over time. So
yeah, and that brings up a great point in that first-time home buyers, if they qualify, there's some programs out there where, because they are first-time home buyers, and if they typically first-time home buyers aren't making those huge salaries that some people who are more established in their careers are making, so there's programs out there where they're even going to get a discount on the PMI. So you may put 3% down and then you get a break on PMI. It's cheaper even still for you because you qualify for these programs. So yeah, so those are all things that we cover in our buyers consults with our folks as they're trying to plan and strategize on how they want to structure the loan. But it's remarkable how many people come in and think, boy, I have to do it this way. And when you put options in front of them, a vast majority of people will say, we're going to go that other route. It makes more sense for us financially. So it's really neat. The last caveat that I would put in there with conventional PMI is there's also options to pay single premiums. So instead of breaking it down into monthly PMI, you can, depending on how much you put down and how much you have available in assets, you can just lump it all together and pay a single premium, just like you would a homeowner's insurance premium, and then you don't have PMI associated with your monthly payment. So some people elect to go that route. That's a route that my wife and I did when we bought our home. We didn't quite have the 20% down. So we did 15% down and just paid the single premium, and we don't have PMI in our monthly payment. We just bought out of it up front.
Oh, that's fantastic.
Yeah.
That's perfect. Yeah. So when you do hit, so you said 20% is kind of that magic number that drops off. When you hit it, is it just automatically removed on average? I mean,
no, that's a great question. So there is a point at which the PMI will automatically fall off. It's typically a little bit over 20 based on the number of payments that you have to make. However, if we have buyers, and we always encourage our buyers to do this, that if anytime you can make an additional principal payment, do it. We want people paying as aggressively as possible on these things, because that's a great wealth strategy. So if you feel like, hey, we've paid aggressively on this thing for several years, and we feel like our property value has increased, you can contact the PMI company and request them to come out, take a look, and do a quick brief appraisal on the property, and they could actually pull it off for you if they feel like, yeah, here's your new loan amount where you currently sit. Here's where we see your property value. You've reached that gap. We will pull it off for you. So you can actually have them look at it that way as well.
Well, that's great for a lot of homeowners right now. There's been a lot of appreciation here in the Kansas City
absolutely.
area over the past 4 years.
Yeah.
A lot of people may have at least 20% equity built up in their homes.
Great point.
And they could have PMI removed.
Absolutely.
Even though it's again, a fairly small cost.
Yeah.
$30 is $30. That's an extra pizza a month for the kids.
Absolutely. And that's all with conventional loans. So FHA is a different loan program that has PMI as well. And I know we were going to maybe talk through that a little bit. So
absolutely.
With an FHA loan, PMI is structured a little bit differently in that there is a portion of that rolls into the loan amount up front. So it's 1.75% not to get too deep into the woods, but that's the portion that's rolled into your loan amount. So you don't come out of pocket that at closing, but it is rolled in. And then there's a monthly percentage that stays with the loan for the life of the loan. Now, the good news is FHA just recently announced that is coming, that amount is going to be reduced. It's going to come down to give those folks a break in what that monthly PMI would be. So it's about a 30 basis point break, which really makes it significantly more affordable for people to consider FHA as well, because that was kind of the kicker for a lot of folks that were hung up on, well, we don't really want to consider that option because that PMI is there forever. Well, if they reduce that, that makes it way more affordable for everyone to have an opportunity to utilize any program that's out there for them.
And will that impact people currently on FHA loans?
That is a great question. I think that there's continuing guidance that's coming out. I don't know how all of that's going to be rolled in at this point. So it was just announced, depending on the time of this video airing, it was just announced a couple of days ago. And so I think there's a lot of conversation that's taking place on can we retroactively reduce these rates for folks that are in loans already. That will be a decision that the Federal Housing Authority gets to decide on how they want to deal with that. But
tax dollars at work.
Right. But I do know for new locks that are coming up, new loans that are originated, that reduction in PMI will be there for them.
I think it officially comes out March 20th.
That is correct. Yeah, in March.
Perfect. So definitely, if you're looking for an FHA loan, work with your real estate agent. Work with great lenders like Steve. Definitely to help you understand and how you can appropriately approach the process. Make sure you're putting down the money you need to put down. You can save the money you don't need to put down towards other items after closing.
Absolutely.
So perfect.
Yeah.
All right. I appreciate your time again today.
Yeah.
You guys have any other questions? Or if you like this video, go ahead and hit that like button. If you want to see more content like this, go ahead and make sure you follow and hit that bell if you want to be notified every time we release a new video. Thanks for joining.